Hello and welcome to another episode of the online interview series, Dialogues on Global Financial Transparency. Uh, it's my great pleasure to welcome Professor Arun Kumar, who's here to talk to us about what have we learned regarding the role of private corporate sector in the economic recovery from the pandemic in developing countries like India. A lot of individuals, us, are interested in knowing more about this topic, and Professor Kumar is particularly well placed to enlighten us on this. Uh, but before we begin, let me give you a brief profile of Professor Kumar. Professor Arun Kumar has taught economics for 31 years at the Center for Economic Studies and Planning, Jawaharlal Nehru University. He is currently the Malcolm Adishia Chair Professor at the Institute of Social Sciences. He has an MA in Physics from Princeton University and Delhi University and a PhD in Economics from JNU. He specializes in public finance, globalization, and macroeconomics. However, one of his key research areas has been Black economy and its impact on Indian economics. He has authored several books like The Black Economy in India by Penguin, Understanding Black Economy and Black Money by Aleph Book, Indian Economy Since Independence, Persisting Colonial Disruption by Vision Books, Demonetization and the Black Economy, Ground Scorching Tax, and Indian Economy's Greatest Crisis, Impact of the Coronavirus and the Road Ahead. He's also known for his work on alternative budgets, 1993 to 94 and 1994 to 95, to demonstrate how alternative policies can be formulated using available resources. Professor Kumar, welcome. Uh, Let me start by asking you this. In the context of economic recovery in countries like India, we have witnessed a swift recovery on many segments, along with a disproportionate increase in the profits of in some segments of the private corporate sector. What are your views on this? Do you believe it's a global trend, or this is something which pertains only to a few countries? What's your overall sense?
India consists of two broad sectors, what we call the organized sector and the unorganized sector. Now, unorganized sector is slightly different from the informal sector. So I stick to the definition of unorganized sector as those sectors where labor is unionized. And organized sector being the sectors where the labor is not unionized. Now, in the organized sector, because they have more capital, more resources, they are able to recover. But even there are some sectors that have done very well. For instance, the IT sector, the telecom sector, those with using technology more and more, they are the sectors that have done well. Then pharmaceuticals, FMCG, where even during lockdown the demand remained high. So these are the sectors that have done well. There are other sectors which have not done so well, which relate to the mass consumption items, where the demand went down because the unorganized sector got hit very hard, and therefore you have the contact services which were hit because of the lockdown and because of the pandemic, and then the unorganized sector, and then these sectors where the mass demand is there, like say textiles or leather goods, etc. So therefore, there are two different kinds of divide, both in the organized sector and within the organized sector and the unorganized sector. So these are the kind of divides that you see, and most likely this similar kind of divide would prevail in most of the countries. Now, what has happened is that the government of India has been following what we call the supply side economics. Now, supply side economics basically implies that you give concessions to businesses so that they invest more. Now, this works, to the benefit of the corporate sector. Similarly, the quantitative easing that has been going on in the world, and also the massive liquidity release in the Indian economy by the central bank, Reserve Bank of India, that gave a lot of funds to the well-off sections, which then went into the stock market. And the stock markets did very well because a lot of funds came in and they bought equities. So the equity prices went up. That meant that the wealth of the well-off sections increased dramatically because the stock market, which had fallen in March 2020, then rose and it almost doubled in prices, and in many cases it went up by multiples, especially technology stocks. Like for instance, in the US also the technology stocks did very well. So there's a lot of liquidity with companies like Google, Facebook, and such like companies, and they then invested in technology stocks in India. So for instance, Reliance Jio, which is a part of the Reliance company, a lot of capital came into Reliance so that they could take advantage of Reliance Jio. So Facebook, Google, etc., invested, and suddenly a company which was the most indebted company in India became debt free within a matter of 6 months, because all the technology companies all over the world with extra liquidity invested in that. So that gives you a sense of what has happened in India. Now, this benefit to the corporate sector that comes from the supply side economics doesn't go down to the unorganized sector, doesn't go down to the companies that are not doing so well. And therefore, what you see is this, what people call a K-shaped recovery. This has happened in many economies in many countries. And also what has happened is that, a certain kind of contact services, etc., that were not doing well in India, they did not suffer as much in the advanced countries, where they supported labor and they supported small businesses as well. In India, even though there was a move to support what is called the micro sector and the small and medium sector, but the bulk of the benefit went to the small and medium sector and not the micro sector. Now, we must realize that the micro sector in India is the dominant sector. So because the micro sector got hit, employment got hit. And this employment getting hit meant that mass demand, and that's where the problem came. So in a sense, you see, if you disaggregate the Indian economy, then there are certain sectors that have not done well at all. The corporate sector on the whole has done well because of the stock market and the liquidity release by the central banks, by the foreign capital that came into India to take advantage of the technology stocks, etc. So there's this kind of a divergence that you see in the Indian economy.
Thank you for explaining to us how this benefit to the corporate sector, which comes from the supply side economics and the supply side policies, doesn't go down to the unorganized sector. Can we talk more about the policy approaches in this regard? Do you feel that the government response to the pandemic in developing countries enabled the private corporate sector in recovering fast?
As I said, the recovery depends on demand. Now, the policy that was there, as I said, is a supply side policy in the Indian context and most of the countries. But in the advanced countries, they also gave some benefit to the people who are, say, like in the US, below $75,000 of income. They gave money in hand. And then similarly, they gave money to the small businesses so that they don't fire the workers. Now, that's where the employment problem did not get so acute in those well-off countries. But in India, the employment problem became acute because the unorganized sector and the micro sector could not get the benefit of the policies that the government was talking about. So even though there was a loan, for instance, that the companies had taken, that was deferred by 6 months, and then there was a interest waiver that took place, etc. But the benefit of that went to the small and medium and to the large rather than to the micro sector. Now, where in the advanced countries you gave a lot more to these to the workers, to the small businesses. In India, we only gave 1.5% of the GDP to these segments. Bulk of what was given was in the form of liquidity and in the form of loan. So what was called the Atmanirbhar Bharat package, which was supposed to be 22 lakh crores, bulk of it was actually liquidity release by the RBI of about 9 lakh crores and loans, etc., that were given. Whereas very little was given to the poor people and to the small businesses. So there's a sort of a split between what the advanced countries managed to do and what the developing country like India did. So therefore, we needed to be more discerning in our approach and give a lot more to the poorer segments and to the small and the unorganized sector than we gave.
You mentioned unorganized sector so many times. Now the unorganized sector in India was already grappling with with challenges since the last few years, and these got aggravated during these difficult times of the pandemic, as you explained to us. We would like to understand from you whether similar challenges have been witnessed in other developing countries too, or if this has been an India-specific issue. How concerned are you?
India seems to have the largest unorganized sector. 94% of the workforce is in the unorganized sector, and it produces 45% of the output of the economy. If we look at the National, Statistical Organization data on incomes and so on, then that data suggests 45% of the output comes from the unorganized sector. Of this, about 14% comes from agriculture and 31% from non-agriculture. Now, agriculture could continue to function during the lockdown because it's in the open, but non-agriculture work, that was the one that got affected. And that's a lot of production that got affected, and especially where contact services were concerned, they are the ones that got affected. So the challenge was how to support this unorganized sector, which works with very little capital. The average employment in a unorganized or a micro sector unit is 1.7. So it's very different from what the small and medium is, or what the large sector is. Their problems have been that they work entirely in cash. They have very little capital, and therefore, if you have a closure of a unit for say even 1 week or 2 weeks, then it becomes very difficult for them to revive because they eat away their capital. So their capital gets exhausted, then they're not able to employ people, they're not able to buy, they don't have the working capital to buy raw materials. So therefore, it becomes very difficult to start. And because the banking system is not able to reach to them, therefore, they have to go to the informal money markets and borrow at high interest cost if they have to revive the business. And that means additional costs, and therefore, large number of these micro units actually closed down and they could not revive. So what was required was that this unorganized sector, what it needs is finance. That finance is very critical if you have to revive them. And then they have had a problem with regard to marketing of their product and with regard to technology. So the three challenges that face the small sector and the micro sector are technology, finance, and marketing. This is what needed to be provided by the government in a big way. Now, it's true that you can't suddenly do it all at once. It should have been done from much earlier, but especially now, all this should have been looked at and it should have been provided. But instead, the government was happy because it was doing this, that, and the other for the large sector and the small and medium sector. So it didn't look really at the micro sector. So that's where what I have been arguing is that as far as data is concerned and as far as policy is concerned, this micro sector and the unorganized sector gets invisibilized because in the data it's not captured. In the GDP data that comes, it doesn't get captured independently. You get data from the organized sector and you base your analysis on the organized sector data. But what has happened is the organized sector has risen, whereas the unorganized sector has been declining. So you can't use the organized sector as a proxy for the unorganized sector and base your policies entirely on the organized sector. So this is what I call the invisibilization of the unorganized sector. So both in terms of data, where it's not counted separately, and in terms of policy, where it's not given special consideration, we have not done that. So India's challenge is much greater than that of the advanced countries. And that's why we saw that in the first quarter after the pandemic started, Indian economy declined by the largest amount out of all the G20 countries, because none of the G20 countries have 94% of their workers in the unorganized sector. And that's why you saw the largest migration from the cities to the rural areas in India. You did not witness this in Brazil or China or other countries which are similar size to India. I don't recall seeing any reports of such a mass migration from cities to villages in other developing countries also. So in some senses, India is a special case where we have such a huge unorganized sector, which is invisibilized in terms of policy.
You are right in pointing out that we have a huge unorganized sector and it is invisibilized in terms of policy. So can you tell us what kind of policy measures would be needed to aid a faster recovery of the unorganized sector enterprises? Do we have any good practices from other countries?
I mean, especially China, where they had a large village industry, There they provided technology support, they provided marketing support, and they provided finance to these village industries, and which did very well in the 80s and the 90s, and that's what their growth was based on. We also needed to have done that quite some time back, but especially at this stage. But to begin with, what needed to be done was, as I said, instead of giving only 1.5% of GDP to the poor people, we needed to give them at least 3 to 4% of GDP. So they had more incomes in hand, and if they had more incomes in hand, then they would spend it in the economy, and then the demand would come up. What happened during the pandemic was that the consumer confidence declined. So consumer confidence, which used to be at about 105, as measured according to certain, parameters, that went down from January 2020, before the pandemic, at 105 to roughly about 60, and even below 60. It's still at about 62 in November last year, during the Omicron period. So consumer confidence went down, which meant that purchases went down. And when purchases go down, then capacity utilization of industry goes down. So capacity utilization has been consistently below 70. And when capacity utilization is below 70, as per the RBI data, and this data is from the organized sector. If you include the unorganized sector, then capacity utilization is even lower. Now, when capacity utilization is low, then people don't invest. Businesses don't invest, industries don't invest. So they will invest in those areas where they're doing well, like in telecom or like in technology-related stocks, etc. But in the rest of the economy, the investment comes down. And when investment comes down as an aggregate, then the growth comes down. So therefore, revival of demand is crucial. Supply side policies will not deliver unless demand is there. So we have this example that in 2019, when the government cut the corporate tax rate quite substantially, hoping that that would boost investment because the profits will go up when the corporate tax rate comes down, then they would boost investment. But because already demand was down before the pandemic hit us, therefore they did not invest more. They only used the extra money that they had to actually liquidate their debt. And that is what has been happening. So therefore, the company's balance sheets are looking good because the debt is now down because they've used the extra profit to do that, but not invested more. So the lesson is we need to generate demand. For that, we need to boost the rural employment guarantee scheme. As I said, not by a factor of 2, but by a factor of at least 4 or 5. We need to do that so that we could give maybe 200 days of work per family. Plus, we could also, increase the wages that are given under the rural employment guarantee scheme. A similar scheme of the urban areas, because a large number of people in the urban areas lost employment. So therefore, needed an urban employment guarantee scheme. And then what you also needed to do was, as I was saying, for the micro sector, finance, marketing, and technology. We have to move in that direction. That will take some time, but we have to start moving in that direction. And then we also, what we needed to do was focus attention on small projects rather than big capital projects. You see, the big capital projects are very capital intensive. So if you see a highway construction or a railway freight corridor construction, you have large machines that work with very few people working. Now, a similar project, say 40 years back, would have seen hundreds of people working on railway tracks and on road construction, etc. Now you see at any site 5 or 10 people working because it's heavily mechanized. So direct employment generation in big infrastructure projects has become very little. But the government, unfortunately, is focusing in the budget on these big infrastructure projects. Instead, what it needed to do was create rural infrastructure. For instance, our rural areas have very little infrastructure, or very poor quality infrastructure. So, for instance, schools, dispensaries, and the pandemic brought out that the dispensaries and hospitals and doctors were missing in the rural areas or in the small towns. Now, those we need to set up. Education quality is very poor in rural areas. We need to spend a lot more on education in rural areas and in urban areas in government schools where classrooms can be 60, 70 children. So we could employ a lot more teachers. So that way we could have given a lot more employment to the unemployed youth, which is educated and unemployed, and which has given up hope of getting a job. So in other words, employment generation, giving incomes in the hand, support to the micro sector, these are some of the things that needed to be thought of, and where some of these schemes would take time, at least initiate them, and this employment generation and giving money in the hand of poor, that could be done immediately.
In light of what you explained and the facts that you shared. Can you tell us what are some of the main policy lessons for developing countries from the experience of their economies during the pandemic? In your assessment, what concrete efforts are needed to attenuate our problems?
The first thing is, our data is inaccurate as far as the unorganized sector and the micro sector is concerned. So we may need to make attempts to improve that by doing surveys. Now, some private surveys have been available, but government doesn't depend on them. So in other words, what was required was, if we got the actual picture of the impact on the unorganized sector, then policymakers would have had to, address them. But what the policymakers are doing is they're depending on the official data, which is entirely based on the organized sector. So even, for instance, the agriculture sector data is inaccurate, even though the agriculture sector data keeps coming regularly. But what's happening is that the agriculture sector data, we assume that the targets will be fulfilled. Now, think about the immediate lockdown when it took place. At that time, targets were not fulfilled because a lot of the crop could not come to the market. Floriculture, horticulture, poultry and dairy, this is half the production of agriculture. So this came down dramatically, but we simply assume that no, it was working all right. And therefore our policy went wrong because the farmers' incomes went down, especially in this half. And when their income went down, they were, they had much less income to actually do purchases. So in other words, first thing is data. Data has to be correct for policy to be correct. If the data is incorrect, then the policy will also go wrong. And therefore, this dependence of the government on the supply side policies. Now, these supply side policies will deliver provided demand is there over the medium to long run. Now, we cannot wait for medium to long run because in the meanwhile, if the demand doesn't come back up, then the medium to long run will also not work out. So policymakers needed to understand that it's the demand which is critical at this point of time, not the supply side policies. So our policies went completely wrong, and it is because our data was incorrect. So data had to be correct, and then the policies had to be also accordingly structured so that we could take care of demand. And the fiscal deficit would have increased, but that would not have mattered because all countries increased their fiscal deficit. For instance, in the US, the fiscal deficit went up to about 20% of GDP. When Mr. Trump was there, he gave a $2 trillion package. Then before he went away, there was another $900 billion. And when Mr. Biden came, then there was another $2 trillion package. So you can add to the already existing, fiscal deficit that was there. And this came to about 20-25% of GDP. Whereas India's fiscal deficit of the center was only about 9.5%. If you add to that the states and the public sector, it was still maybe only about 14-15% of GDP. So we still had space to increase it, and the credit rating agencies and the IMF and the World Bank would not have frowned on it because every country was increasing the fiscal deficit. And because when the demand is down, then increasing fiscal deficit does not lead to inflation. So therefore, it's the fear that the high fiscal deficit would lead to inflation, that would have also not been correct. The inflation kicked up a little later because of supply bottlenecks. In the US now you have record inflation, and that's because there are supply bottlenecks. For instance, the production of chips has suffered, and therefore automobiles are not getting the chips. There is shortage of automobiles. So the discounts that were available earlier in the automobile sector, those are not available. Similarly, many of the small units and the micro units closed down, so supply chains have got disrupted. Similarly, for instance, petroleum goods, their supplies have been disrupted, and that's why the petroleum goods prices have risen. Metal prices have risen globally because of that, and that is what is feeding into inflation. So it's not because of high liquidity or high demand that the inflation was kicking up. It's because of these supply bottlenecks and other things. So we should have also recognized all this, and we should have also gone in for a higher this thing. Now, that doesn't mean that we're not having currently a high inflation. In India also, we're having above 10% wholesale price inflation in the last 11 months. But that's, as I said, because of supply bottlenecks rather than because the demand is very high.
Now, a shift of gears. It will be great if we can use this platform to seek some important tips from you for those who are starting new in their career as researchers or campaigners in the field of financial transparency and tax justice. What should they keep in mind if they want to be successful in what they are doing?
So, the post-pandemic, the world is headed towards a new normal. This new normal will be because we will not be able to do work in the way we were doing earlier. There's a lot more of technology use that has come in, and that's going to result in massive unemployment. So researchers have to picture what all this will mean in the next 10 years. So then a lot of new questions that'll get thrown up, which we need to tackle. So in other words, there are a lot of challenges that are facing us. So we need to imagine and figure out where we are headed and what do we need to do now to be able to take on those challenges.
Wonderful, Professor Kumar. We have come to the end of the interview. Thank you so much for joining us with your thoughts. Thank you.